Well, you know, I've been thinking about something lately. I'm turning 70 this year, and people still ask me the same question they asked when I was 40. Bill, how did you do it? How did you get so rich? The funny thing is, the answer has not changed. Most people think wealth is complicated, that you need some secret formula or insider knowledge. That is not really how it works. When I was a kid in Seattle, maybe 13 years old, tinkering with computers at the University of Washington after hours, my dad told me something I never forgot. It's not about how much you make, it's about how much you keep, and what you do with what you keep. After all these decades, that lesson still holds up. So today, I want to share the real habits that built everything I have, not theories, not fancy strategies. Just simple things that work if you're willing to be patient. First, you have to live below your means. It sounds boring, which is exactly why people ignore it. They want hot stock tips and get-rich-quick schemes. But wealth starts with a gap, the space between what you earn and what you spend. That gap is where your future lives. People ask why I still live relatively simply, drive ordinary cars, eat at McDonald's. Sometimes they say, Bill, why not buy fleets of luxury cars or a private jet for every trip? And I tell them, because I'm happy, my home has everything I need. Why trade that for more extravagance and a pile of empty luxuries? Every dollar you spend on things you do not need is a dollar that cannot work for you. Spend $50,000 on a car you don't need, prob. And you're not just spending $50,000 at a reasonable return over a couple of decades. You might be trading it for several $100,000. Your future self will never see. I'm not telling you to live like a monk, enjoy life, but be honest about what really makes you happy. For me, the best things have been time with people I love, meaningful work, a good book, a game with friends. Living simply let me focus on what mattered, reinvesting in Microsoft early on. And later in philanthropy, through the Gates Foundation, frugality is not deprivation. It is prioritization, track your expenses, cut the waste, make saving automatic, let that gap between income and expenses grow and compound. Most millionaires quietly do this. Wealth is not about looking rich. It's about keeping more than you spend and letting it grow. Second, invest in yourself first. The best investment you can make is not in stocks or real estate. It is in your skills, your knowledge, your abilities. Nobody can take that from you. When I was young, I was obsessed with programming, but I also pushed myself to learn business, communication, and other fields. I left Harvard, but I never stopped learning. And that investment changed my life. It gave me the confidence to start Microsoft, to negotiate, to explain complex ideas. Your earning power is your biggest asset when you're young. If you improve your skills enough to boost your income, that extra income every year for decades can be worth hundreds of thousands of dollars before you even invest a cent. Read, learn, take courses, get mentors, get better at communicating, get better at your craft, dedicate a little time each day to learning something useful. Over time, that knowledge compounds the same way money does. It opens doors, creates opportunities, and gives you leverage. Third, be patient. We live in a world where everyone wants everything now, but real wealth does not work that way. The market is a device for transferring money from the impatient to the patient. When we started Microsoft and 1,975 people asked where the growth would come from, I believe people would still be using software decades later, and I was willing to wait. The wealth did not come from perfectly timing the market. It came from letting a good thing keeping good for a long time. Think like a farmer. You plant seeds in the spring. You do not dig them up every week to check them. You water them, protect them, and let time do its work. In the fall, you harvest. Investing is the same. Most people cannot handle the waiting. They see someone making fast money on some hot trend, panic about missing out, and jump in at the worst time. Patience is not just a virtue in investing. It is almost the whole game. Set long-term goals. Judge your progress over years, not days. Ignore most of the noise. Let compounding work. Fourth, only invest in what you understand. It is a simple rule very few people follow. In the late 1990s, people were chasing every dot-com stock that popped up. They asked why I wasn't buying everything that was going up 50 or 100% a month. The answer was simple. I did not understand all those business models or how those companies would make money 10 years out. So I passed. People said I was out of touch. Then the bubble burst, and a lot of those so-called geniuses lost everything. You can always learn new things, but there is a difference between learning and betting real money on something you do not truly understand. When you know a business well, you can hold it through tough times because you understand why you own it. If you do not, the first big drop will scare you out at exactly the wrong time. Stay in your circle of competence. Gradually expand it by studying industries and companies before you invest. Understanding reduces fear and mistakes. Fifth, always have a margin of safety. Nothing in life or investing goes exactly according to plan. There is always uncertainty. A margin of safety is your cushion, your buffer. If I think a company is worth $100 a share, I do not want to pay $100. I want to pay $60 or $70. Maybe I am wrong. Maybe the world changes. With a margin of safety, I still have room for error. Without it, a small mistake can become a big loss. This applies to your personal finances too. Do not borrow to the limit. Do not spend every dollar you make. Have an emergency fund. Carry insurance. Give yourself room to make mistakes, because you will, the people who get wiped out are usually the ones living with no buffer. One bad break, one job loss, one crisis, and they are done. Sixth, protect your reputation. It takes a long time to build and very little to destroy. Your reputation is more valuable than money, because with a good reputation, you can always make more money, lose it, and rebuilding is very hard. I have walked away from deals that could have made me richer because something felt off or the people involved were not trustworthy. Money comes and goes. Your name, your integrity, that is the foundation. People do business with people they trust. They hire people they trust. You cannot fake that. It comes from doing what you say you will do, treating people fairly and being honest, even when it costs you. Seventh, avoid debt as much as you possibly can. Debt is dangerous, especially consumer debt. It starts small and manageable, but life happens and suddenly it becomes a weight you cannot carry. When every dollar you earn goes to interest, you cannot save or invest. You are stuck. Not all debt is evil. A sensible mortgage on a home you can truly afford is different from putting vacations and gadgets on a credit card. But borrowing to live a lifestyle beyond your means is a trap. Live within your means. Save first. Spend what is left, not the other way around. If you are already in debt, make getting out your top priority. Pay it down, cut unnecessary expenses, and stop adding to the balance. The freedom you feel when you are debt-free is hard to overstate. Eighth, never stop learning. School is not the end of your education. The world changes too fast for that. If you stop learning, you fall behind. I still read for hours a day. I am not cramming for an exam. I am feeding my curiosity. I want to understand how things work, what is coming next. That habit has kept me relevant for decades. Learning compounds. Each book, each lecture, each conversation adds a bit of knowledge. Over time, patterns emerge. You see connections. Other people miss, that becomes your edge. Read about business, history, science, human nature. Read biographies. Every book is a conversation with someone who can teach you something. Today, you can learn almost anything online for little or no money. Make learning a daily habit. Ninth, choose your people wisely. Surround yourself with people who are better than you in some way. If you are always the smartest person in the room, you are in the wrong room. I have been lucky to work with extraordinary people, from Paul Allen at Microsoft to scientists and leaders in philanthropy. We did not always agree. That was the point. They saw things I did not. Their perspectives challenged me and made me better. You become like the people you spend time with. If your friends waste money, never save, never think about the future, chances are you will drift that way too. If you spend time with people who learn, invest, and think long-term, that rubs off on you. Relationships are good ones, are a form of wealth. They bring you ideas, warnings, support, and joy. Be intentional about who you let into your inner circle. Be the kind of person others can rely on too. Finally, think long-term. Most people think in days or weeks. Real wealth is built over decades. Time is the friend of a wonderful business and the enemy of a mediocre one. A strong company with a real advantage and good management tends to get better over time. A weak one falls behind. So when I invest, I ask, where will this be in 10 or 20 years? Will people still need what it offers? If the answer is yes, and the price is fair, I am interested. Then I let time work. Compounding is powerful. Start with $10,000. At 10% a year, in 10 years, you have about 26,000. In 20 years, it is many times your starting amount. The money and the return are the same. Time makes the difference. That is why young people have such an advantage. If you start in your 20s, even small, regular investments can grow into real wealth by the time you retire. If you wait till your 50s, you have to save far more to get the same result. So start now. Think in decades, not days. Ignore most of the noise. Let good decision compound. These are the habits. Live below your means. Invest in yourself. Be patient. Stick to what you understand. Insist on a margin of safety. Guard your reputation. Avoid debt. Keep learning. Surround yourself with good people. Think long term. The world has changed a lot since I was a kid, sneaking into computer labs in Seattle. But human nature has not changed. We still struggle with greed, fear, impatience, and the temptation of shortcuts. That is why these habits work. They go against our worst instincts. You do not need to be a genius to build wealth. You do not need to work in tech. You do not need to get lucky. You just need to do the right, simple things consistently for a long time. It does not matter where you are starting from or how many mistakes you have made before. What matters is what you do next. Start living below your means. Start investing something. Start learning. Start surrounding yourself with people who pull you up. Start thinking long term. Do those things, and in time, you will look back and be amazed at how far you came. Not overnight, but slowly, then faster, like a snowball rolling downhill. You will find yourself wealthy, not just in money, but in time, freedom, and peace of mind. That is the real goal. That is what it is all about. So start today. Pick one habit, commit to it, then add another. Time is on your side if you let it be. Thank you for listening.